Hello and welcome back. We are the Dust Suckers and we are here with another episode, our actually second episode. Hello, Joy. How are you doing?
I'm good. Yourself?
I'm fine. I'm very excited and energetic today. I just got my cold bath. I make a cold bath almost every day. You know that. But it gives me a lot of dopamine. So now I'm like that energetic. That's the reason.
Yeah. That's something that I always wanted to do, and I'm going to come to Finland sometime to try that out. I like swimming in cold water, but never tried ice baths, so that should also be fun.
You should have bet. You better try first in Lisbon with the temperature of the tap that there, and then when you get used to it, to that you can come over here.
All right, that sounds good.
Okay, so what we gonna talk today, my friend?
Yeah, and so today we're kind of covering the housing market, and the interesting part of that is that you have the real life experience with real estate with your background, and I have more of the macroeconomic view of the macro view of the housing market, the effect it has on society. So we're going to come at it from two different angles, and I think that hopefully that should be interesting.
That's for sure is gonna be super interesting. Yeah, I have experienced the real estate market since 2005 when I was just 18 years old. I started very early, and well, I will be happy to to spread here the learnings and the happenings after these 20 years or almost 20 years. What if we start with let's make us like a question like this, like how does the housing markets affect the markets itself, the financial markets? What is your opening sentence from there?
Yeah. So housing market, I've been thinking about this a lot actually for a long time. And if you take it back one step and you go to what drives people, if you look at the hamster wheel that most people are in, right? You go to. I have this discussion with my children sometimes. It's very interesting. And when your children get a little bit older, you can have similar discussions. So what you actually talk to them about is why they're in school, why they're doing all this learning, all this pressure from tests and all that, and then they need to go to hopefully to university or business school or whatever they want to do, and then something really scary happens. Your working life starts, right? So you're basically then looking at working from maybe until you're from you're 20 years old until you're 67, 68, maybe even 70, who knows? We don't know what's going to happen. And all those years you're working, and for a child that feels very scary because it feels like a very long time that you don't have your freedom and you're going to be focusing on something that you might not enjoy. And the reason why people get into that hamster wheel is because they all need to pay this mortgage, and they want this house. So they all have this financial pressure because of what they want to own, and that is normally a house. So that's basically the base of it all, actually, is that the housing market drives our happiness in a way.
It's incredible because we are finally sometimes just following like this is what we need to do as a human being. We need to own a house. We need to buy it. When actually what fortunes do is a little bit the opposite. You buy houses, but you have buy houses to invest, to let other people live there, and then they pay you a rent, and then yourself you live in the rent. And this is something that I learned. I learned it late in my real estate career because coming from Mallorca, as I told where I come from, it's a very tiny place. The real estate market it gets an amazing increase in value every year. The places are more expensive because there is less land, and in an island, when the whole land is sold, there's nothing else. So
Hmm.
it's so scarce, right? So the scarcity drives the prices up, and I can tell you that one example, and this is a personal example, and I'm not planning to show off of my future wealth or anything, but it's just an example. My grandfather bought a land in 1962 for what was in that time. Uh, think about it, would be 30 euros, right? 30 euros, it was the amount that he used to buy that, but by that time maybe it would be like 20,000 euros now. All right.
Yeah.
If you discount if you count the value increase of the
It
money.
was in pesetas, right?
It
Yeah.
was in pesetas, exactly. It was 5,000 pesetas. It was so the value of our land now, where you can build a big property and you can, it's about €1 million. So tell me, how the hell anybody will invest $40 in something and get out of million? Like, uh, these things happen in Mallorca. Of course, it happens, and the property stays in the family. I'm not going to sell this property. I'm not planning to do anything with them. I got offers already. I could sell it and give my dad half and me the other half, and
Yeah.
have buy a nice apartment in Helsinki. But that's not the point. The point for us is different. The point is to build the house and enjoy it and keep it in the family as a family asset. But that's one advantage we have being locals. That's one Mallorcan thing. But me, as an investor, I do not think that buying a house right now as my home is a good example even for my kids, because I don't want to live under that pressure. As you said,
Hmm.
I prefer to buy some apartment to invest and rent it, and from those profits, do something else. This is something that is so complicated to understand, but the day you get it, and then you see actual millionaires living into that structure, you are like, wow, this actually works. Why not?
Yeah. Yeah. And I think that's there's an old saying that goes, if you want to get rich, act like the wealthy people, right? I mean, and not exactly in those words, but kind of similar. If you look at the best ways to actually make money, it's to go for the maximum yield on your assets, on your capital. And by buying properties and renting them out, obviously, we've seen that the even if the housing markets fluctuate, the yields generally remain quite good in the popular places. The problem that a lot of countries have with that, and especially the socialist leaning countries, is that they're starting to say now, what is actually the added benefit of a landlord to the society as a whole? And that's where the problems come in, that at some stage, governments will start taxing, of course, the landlords more. And we see this happening in the Netherlands already, that the home property is actually going to be taxed more and more as an asset, but also the returns from renting out those properties. And you'll see this coming in more and more places, I think. And that's something to be aware of course, depending on where you live and depending on where you buy properties. So that's something that I would definitely keep in mind. So, and then you've got the Black Rocks, of course, of this world, who are doing exactly the same thing and are one of the reasons why everyone's paying high rents at the moment.
Exactly. There is like a plan. I by the way listened this in one of my favorite podcasts. It's called Emprendeduros. It's in Spanish, and it's a podcast that happens in the United States, but it's driven by Mexicans and one Spanish, actually one Spanish guy who's a chartist and macroeconomist and kind of you version.
Hmm.
And they were in one episode, they were talking about, by the way, if you like that and you speak Spanish, you should follow them. um, they were talking about that BlackRock has been buying like entire buildings of student homes. First of all, they started with student homes that in the end they are like one room apartment of 25 square meters. You get your bathroom and your kitchen, living room and bedroom all at once. That is perfectly livable. It's actually one model of housing that works very well in the Nordics, because the prices up here are really expensive. So people live in very, very tiny places generally. It's absolutely the opposite if you compare it to Spain. In Spain, a normal house or a small house is 90 square meters, 3 bedrooms, 2 bathrooms. That's it. In here, 90 square meters is almost a luxury in the center of Helsinki if you compare. So they started to buy those, and then they went to some to bigger buildings, and it looks that the intention is that the BlackRock or the whole, those five who are dominating the earth, they want
Hmm.
us to live under rent, everything as a service. That's the model. if you remember back when we started our master in business, the how many businesses or startups haven't been released under the model of something as a service, right? Food as a service,
Yeah.
car as a service, software as a service, learning as a service, everything is as a service. And everything is because the money needs to be moved monthly, needs to create recurrency. And
Cash flow. Yeah.
yeah, exactly, it needs to create cash flow. And if you look at the whole world, we are going to that model even with the housing market, because with the car, we already went with the car. You have leasing that now is not anymore leasing because it doesn't activate the company, so it doesn't count as an asset. The car is like a renting. So here we are again with the renting model, and the housing is the next. The question is, what the hell we are going to own in 20 years from now?
Yeah. Yeah. And if in a time of kind of imbalance and inequality, if you like, in asset ownership, if you go towards a society or a fiscal climate where where taxes are moved more towards asset ownership, that actually drives people's behavior. So I'll give you an example. As you know, I live in Portugal, and we have this scheme called non-habitual residents, which get an interesting tax, basically tax breaks almost for 10 years. So you get, it's favorable when you earn dividends, for example, from foreign dividends, but it's not favorable for buying and selling, for trading of stocks, for example. So what you get is that you are more looking at getting dividends on your stocks rather than actually buying and selling stocks very frequently, because then you get taxed 28 to could be even 35% on on the profits that you make. It's a huge amount. So what it does is actually it drives you to not book proper profits on asset prices, but to getting that stable cash flow in, because that's way more attractive. And then you get people who say, well, wait a minute, Dubai here, you can actually set up a company quite easily. You can put all your investments under that and pay yourself a dividend from there. And then you can still buy and sell and do trading because it's actually away from you here, or in Malta, for example. And there's several of these options. So fiscal law actually completely determines the investments into housing markets as well. And if you have a good tax consultant, and you are very rich, then you will get that information before everyone else gets it, or at least you get it on time. And that drives your investments. And I think that will continue to happen.
Absolutely. And regarding this thing, you are in an environment where, for sure, you have met people look alike to you that have moved there with a business background, investing background, and looking to create some opportunities, or in a good way get advantage of the system of Portugal, of the tax system. But how do you see the housing market there right now? Do you see there is some movement? Do you see the prices have gone up like since you came until now? What's the temperature over there?
Yeah. So one thing that happened during the pandemic is that a lot of people started looking at their lives and started, as we discussed in the first episode as well, a lot of people started thinking, am I happy where I am at the moment? Not only with the location where they are, but also the job that they do, the income they have, how their life looks. And a lot of people started asking questions, especially because of the controls that their governments put on them. And what you see is that after the pandemic, a lot of people started moving around. And even during the pandemic, the housing prices were low at the time because no one moved. And a lot of people especially from the US, came to a place like Portugal. Why? Because every single top 5 list in the US says best places to retire, Portugal. Portugal is always among the best places for some reason, and it's understandable because it's got the best climate you can imagine. It's not too hot in summer, and it's pretty mild winters as well. The food is good. Life is generally very affordable for Americans, especially. So a lot of people have come into this market on golden visas. By buying properties, they could get a golden visa, and they can even get passports here. So a lot of Brazilians, for example, have Portuguese passports as well. So we got Brazilians coming in, we've got the French coming in, we have the Americans coming in, we have people from UK coming in as well, but they very often lean towards Spain still. And that has driven up housing prices a lot. So what you see is that whereas you see a lot of migration from places like Africa, Syria, and so on, Pakistan, Afghanistan, whatever, to Western Europe, you also see a lot of migration from Western Europe towards, and America towards South Europe and towards Asia. And Mexico is one of those places. Now you see El Salvador because of the Bitcoin thing that's going on there. Colombia is popular. There's Panama is popular. So you see a lot of places where wealthy people are moving, and not necessarily very wealthy, but people with a good income. It could be even remote workers. And that has an effect on housing prices. And that also has an effect on the local populations who are very often not able to afford normal houses anymore. And that's going to be affecting children, especially the next generation.
100%. Especially your last part, that unfortunately the circulation of people living in different places that is seeking, let's say, a tax asylum or tax benefits or remote working, it generally, of course, the one who has a higher income goes to a place that is good food, good weather, and generally there is a lower income there. But their impact is positive for the local infrastructure, like little shops, and because people with a higher income also can afford more handcraft stuff, and they have the means to buy more valuable things, so they actually activate the little trade within the villages, which is amazing. But they buy higher properties and properties which are more expensive, and in the end the prices get increased. I'm telling you this because of the example of the island of Mallorca. In Mallorca, we have been experiencing a crazy boom, not because of the experience, the example I put you before about my personal experience in there, but there is a conversation now in the streets and in the newspapers every week that people don't find houses to live, and not even anymore. I'm not talking even to buy. To buy is like almost forgotten. If you don't earn like nearly 4,000 euros per family in Spain or in Mallorca, you can't get a loan, basically. It's like impossible. And let's not forget that the minimum salary in Spain is 1,200 approx right now. Most of people, the average salary is 1,450, something like this. So a couple who is working, who are working, both of them in an okay job, they roughly get like 3,000 euros, roughly. And then you have to discount all the taxes that Spain is not a tax-free paradise. It's actually super heavy on the tax. And I was planning to say communist, but left communist parties that we had for the last 4 years been making it even worse. So the problem is that now there is people who don't find a house. There is no economy that gives chances to people to get new jobs or continue their jobs or escalate to the next level of income or anything like that. It's just impossible. So the locals are starting to leave. And that's a big problem.
Where do they go? Do they go to the mainland then?
No, I think the locals who are living, they are going to places where there is more opportunity. I would say even Germany now is pretty fucked up. They would go to in many ways, but they would go to the UK first always. This is like very popular in Mallorca. People go to the UK, they go to London because it's like going to little New York, close by, and then they go to Germany. and then people go farther from there. I'm a
Yeah.
weirdo because I choose the most far from the beginning. Maybe because I'm a lazy, I'm super lazy guy. In the end, I love to do a lot of things, but I hate to deploy stupid time on it. So I'm like, okay, what's the fastest way to do this? Okay, go there. Okay, I go. So that's
Yeah, yeah.
yeah.
So what
So
do you see? What do you see in what do you see in Finland at the moment, Ramon? Do you see because obviously in many countries it becomes more and more difficult on based on a median salary to buy a home. So what are the alternatives? What do people do in Finland at the moment?
um, okay, let's start from the salaries. As you know, Finland is the, let's say, the poorest of the whole Scandinavian countries. Okay, we think about Denmark, Sweden, and Norway. They all have like a different way to use their currency. Plus, they have petroleum, and they have their system that is not depending 100% on the European Union. So they are pretty safe in that space. They are stronger than us. By the way, this is a question that we all should wonder: like, is the European Union the safe haven, or is a or is a joke? But anyway, so salaries here around the average salary is around 3,000 euros approx ish. So and of course, if you go to like specialized professions like lawyers, doctors, police, blah blah blah, then it goes to 4,000, 5,000, 6,000, blah blah blah, and up and up and up. And then um, you see the next. um, the house the house market has been like, the time to sell a property in Finland or in Helsinki, for example, which is the thermometer, has now gone, I would say, from maximum 3 months to almost 9 months right now. So it's like three times more.
Yeah.
um, that for Finland is super weird, because this is a country where the real estate market is super vibrant. People buy and sell all the time. People love real estate over here because there is a security on earnings. People is not crazy. People is not going to stop paying your rent and leave you without anything. There is consequences,
Mm.
and there is legal consequences for that. Not in Spain, it's not like that. In Spain, you can occupy a house and stay there for 2 years, which is completely mad and stupid, and like,
Mm-hmm.
I would take all the politicians to the prison just for that, because they're stupid allowing it. But anyway, the reason why in Finland doesn't happen is because there is a security, and because there is a security, there is investors who are willing to spend 200K in one apartment of 50 meters, 2 bedrooms or something like this, and put a rent of 1,300 close to Helsinki. Not even, I'm not talking even close to the center, but like 6-7 kilometers, something like this, for those prices. And finally, you get around a 5% return, which is pretty safe haven,
Yeah.
right? Not bad. Um, so now the time has tripled to sell, and I put you an example. One of my best friends own a house very close to the Helsinki center, like, I would say 4 kilometers, 4.5 kilometers, something like this. The house is 69 square meters and has 2 bedrooms, and has separate kitchen and one bathroom, and nice layout, right? It's like a typical square that you can actually divide things really nicely. And they made a renovation themselves. They bought it for 230,000. They spent like 40 or 50,000 there, so almost 300 cost. And a year ago, my friend has 3 kids, and I told him, like, I think your house is going to get small to you, that you should start to look to sell it, and maybe go for a rent 1 year unless you find something else, but do not use the money straight away, because you don't have to buy something stupid, and blah blah blah. And he was like, no, I think not, I will wait. And I say, please, if you have to sell, like, get your family together and take the decision now, because the macroeconomic picture looks really bad, that your house is going to lose a lot of value if you don't do it now. And
Yeah.
he was like, yeah, okay, no, we're not going to sell, he said for me. I went, okay, that's good, fine. And now he decided to sell. The value a year ago was 425,000 euros. The value today, 339,000.
Wonderful. And
It's
that's
a,
what you see. Yeah, that's what you see very often, that the people start selling when they have to sell, and that's always the problem with properties, right? So we've got about 5 minutes left to talk about the housing, and I think one thing that is also interesting is to also look at what we think should be done with the housing market and with these problems, because it's discussing them is one thing. We see it all around us, because it's obvious to everyone that it will be more difficult. If you look at the US data, for example, since the 1970s, I believe, the average spendable income went up 4 times and the average housing price went up 14 times, which means it's becoming incredibly difficult for people, if this continues, to buy homes based on their incomes. So housing becomes more quickly more something of the rich people, and that's a society that we shouldn't want, I think. And that's why I mentioned early in the beginning, there are voices now, and I consider myself, I don't like big governments, and I don't like a big role for the government in the economy. So I wouldn't say I'm a libertarian, but I think free markets. I still think free markets in general are a good thing. If you want this to change, you should make sure that the basic needs in life, which is food, shelter, energy, are becoming affordable for everyone. And that should always be a driver for all politicians around the world. The basic necessities need to remain affordable. If capitalism gets a hold of certain markets, like food, like energy, and you get one energy company, for example, that charges everyone through the roof, and the energy company makes incredible amounts of money while everyone else gets poor, then yes, it's a free market, but it's still a basic necessity. And with housing, I think it's the same way. We should probably stop borrowing and stop lending. And the solution normally when housing becomes more expensive and unaffordable is what politicians do. They said we need to make it easier to borrow. And what does that do over time? Since the Second World War, we see that basically what you do when you lend money, you take the basic artificial economy, the economy that should have been there tomorrow. Because let's take a small example. Because Ford started with the T Fords, right? And they said, we've got a beautiful product. We can change your mobility. We can improve your mobility because a car can get you to places faster. You save time. But there's a bit of a problem. No one can afford one. So what do? We're going to allow people to borrow money and to actually be able to use what they would normally earn tomorrow or next year or the year after, and use that money today. And then suddenly you can buy a car. Suddenly their market grew. And then they said, what if we actually allow, or the car industry in a way, what if we actually allow people to use 5 years worth of potential savings to buy something today? And with housing markets, what if we think about people's 30-year worth of savings that might come up, that we hope they will earn? Then suddenly the housing prices are going up, and they're going up faster than you can actually save. And what I think should be done is that if you take that saving or that borrowing part out of it, you'll see that the market will find a balance between supply and demand based on the real economy. And that means that the house that you live in that is now worth 500,000 euros, for example, might go back to 200,000. Who knows? Who knows where it will end up? But I think if you want to have a healthy housing market, that's in the end what needs to happen. And it means that people need to save money. They need to live in rental properties and then save money. And then eventually they'll be able to buy one once they've saved enough money. And I don't see any other option, because otherwise it will never end.
Absolutely. It does it repeats over and over this like similar structure that you were mentioning, that we need to let it happen. We need to let the water go back to the stable level, because we've been in a kind of a storm where like prices are being driven up over nothing. In Spanish we have a sentence that means that is a giant made of sand, right?
Mhm.
So basically or a giant with the mat legs. They
Yeah.
can, when there is a little bit of water, the legs are gonna melt straight away. Are gonna fall, right? So I feel the same way in this, and I think to end this part of the housing market, we could give like a kind of a final sentence, or not a financial advice, but our vision of what is going on. I think my forecast as a real estate lover and professional in a way is that if you have any property and you really don't need it, try to keep it for the next 3 years or 2 years. And if you really need to sell it because you want to unload, or you need capital, or you want to get profits, try to sell it close to 2026 and try to survive in the middle, because now it already started to go down. There is no indicator that in the next 2 years things are going to get super well, but there is indicators that in 2026 we might start to see some better light. So also in other properties I own, I don't own too much, but a couple. I have decided the same thing. If I have persons who are paying the rent, I prefer to struggle a little bit and need and find the need to bring bigger income to my family instead of sell any of my assets, because that now is not a good plan. What's your thought about what I just said, or your own thought?
Yeah, I think if you own properties, you rent them out, you get cash flow from it. It's something to cherish. I, I I I think tenants. I also respect that tenants sometimes can be people who struggle financially as well. So we should also keep that into account. So one of the things that I've seen in my 7 years in Dubai, which are landlords basically squeezing, trying to get maximum rent increases every single year. And of course, the authorities are doing a lot to actually prevent that from happening. But still, rents can go up incredibly fast. And there could be a certain things that a tenant or the landlord can do to push out the tenant so that they can actually hike the rent. So those things I'm a little bit worried about in certain markets. But for me, owning a property, it's not the right time to buy at the moment. I think I'm renting at the moment here as well, and I think that is pretty good because it allows me to also put more money into the financial markets once that bottoms out. And I think from what I've heard is that what I've learned is that some of the the inflationary periods that we've seen in the past 100 years, in such times, it very often took a long time for housing markets to recover, because inflation, of course, is being fought by central banks. They try to raise interest rates and squeeze the money supply to get inflation to come down. That affects housing markets a lot. I think that's something we should be very careful with. So don't be over leveraged to housing markets, but if you've got a stable cash flow, I think that should be fine.
Great, perfect. So we are almost in the approaching the end of this episode, but now for this last minutes, we are going to dig into a little bit the latest happenings in the world, from money, technology, crypto, all the things we love. Joey, I have been. It has blown my mind this week,
Mhm.
or a few days ago, the release of the Apple Vision Pro glasses. Oh my fucking god! What are we not going to own a phone? Are we not going to own a computer? Are we not going to own a television anymore? What's going on?
I think it's super interesting, and although I mean I hate screens, honestly, I really detest screens.
What?
I detest. No, let me get to it. Let me get to it. I see my children on screens. I don't like it. Going to a music concert, looking at thousands of mobile phone screens of people who can't enjoy the moment and need to record everything. I something inside me says this is not right about this time.
You are right on
However,
that.
having said that, if I look at the amount of companies that are really innovating and that are coming with new things, I would say Apple is one of them that does that, and there's not many left anymore. And having the guts and the courage as a company to come up with a completely new technology after even, well, Google tried the Google Glass and that failed. Apple didn't think it failed, so we're not going to try it. They said it failed because, and we're going to do it better. And they came with something that could potentially eventually replace televisions. It could replace computers. It could replace phone screens. At this moment, if I look at it with my down-to-earth kind of mindset, I'm thinking that will never work. But at the same time, I'm thinking there's a lot of things that I said would never work, and they end up working.
Yeah, and there is where we bite the dust and suck the dust. That's why we are
Yes.
we are called the dust suckers. Yeah. Yeah, my or just a short takeaway of this. I was just talking to my wife yesterday, and I said that how much people which is unhappy with their own reality now going super depressant, super sad, like
Yeah.
super dark comment. But you will understand how much people who hates their own reality won't get hooked to this and will start to spend like 70% of their awake time into that.
We're going into have you seen Black Mirror?
Yeah, it's Black Mirror. It's fucking happening. Like there is no
Exactly. Yeah.
there is no other way. I'm saying this because we just saw one short series based on real facts, really interesting in Disney Plus, because of the kids. We paid the Disney Plus, and I was like, I won't pay it if there is nothing else to watch than kids things. But there is things for the parents.
Yeah.
And then we watched one series that is called Dope Sick. And Dope Sick talks about one opioid that it was introduced in America in the late 90s and 2000s that was called OxyContin. And OxyContin, it was, I guess it's right, the data, it was introduced by a company called Purdue Pharma. And they use like the most like horrible sales techniques to introduce the pill to the market, to make people live under the pill. They were giving commission to the doctors, incentives, blah blah blah, all of that. And I was finding a similar scenario of people who live under antidepressants. You can be depressed, and you might need to take it, and that's okay. Even I am against that, but that's okay. Some people really need it, but there is some medicines that you get hooked forever. And part of me believes that the Vision Pro thing, you can get hooked forever if you don't fucking understand that, hey, there is trees and life over there that go to get a little bit vitamin D and enjoy.
Yeah.
So this is my fear. But as an Apple lover, technology lover, and early adopter, I want to try it now if I can, right?
Yeah.
So yeah, that's one thing. What about the crypto market? There's been a little bit rock and roll yesterday.
Yeah, we had the Binance situation, and then Coinbase followed as well. Well, what I think what a lot of people see, and I think Twitter is great for a kind of feeling the sentiment in the market, and not only it's not a good representation of the entire market maybe, but there's a lot of people who basically lost trust in SEC. There's a lot of people who basically state, why didn't FTX get the treatment that Binance and Coinbase are getting, for example? And why is SBF? What happened to SBF, for example, and his friends? And I think the US is very much a market where you need to be friends with important people, and then you can get away with things. And if you're not friends with them, they say it's a big club and you're not in it. That's what happens. And there's a reason why Binance is in UAE and why Coinbase is probably going to end up there as well at some stage. It is that they are the most friendly towards the crypto community. They are not only the community, but also the innovation side of things. They want crypto to be there because they know it's going to be a growing market in the end. So they're open to that. And the US simply sees it as a threat to the US dollar. And I understand there were some things in the Binance. I've read the CNBC article as well. And you know, there are, if you look at the structure of Binance US versus Binance as a separate entity, and how what it says is Binance employees were encouraging users to evade the exchange's know your customer systems through VPNs. The Binance were allegedly engaged in wash trading, so trading with themselves to artificially prop up the price of crypto assets. There's a couple of things in there that sound pretty shady, and we've seen that with Luna as well. So let legal side of things sort that out. But I haven't seen many crypto-friendly legislations in the US so far, and I think they're basically just saying, do it, but not in the US.
You know what I think? Okay, just sorry. Is the total crypto cap right now is around 1 trillion, right?
Yeah.
It's considerable money, right? I think since one of the and this is Ramon's. Let's start to introduce this in our podcast. Ramon's future paranoid vision moment. Okay, now this is what's happening now. I think because they want to finally rule the world with the CBDCs and control where we shit and what we eat. I think they want that money out of crypto to have it available in fiat and then rule the whole thing themselves, that you cannot rule separately any kind of money. Okay, Bitcoin will always exist wherever they cancel withdrawals or they don't allow withdrawals. Bitcoin will be always there and will have the value that people decide to have, that it has to have. But crypto itself, like anything else out of Bitcoin, let's see pair crypto and Bitcoin, like it feels for me that they are chasing that money. They are chasing that trillion total cap, and I just don't see any other reason why. Because why the hell they would be that nervous and that heavy on the same topic, and that with that little arguments? Have you read the arguments that they are putting? Like, they are ridiculous. They are really
Well,
ridiculous. And if
yeah.
you understand a little bit of blockchain, then you are like, pardon, but we're supposed to be more transparent than you. What the hell is
Yeah.
this?
Yeah. Yeah. And I think $1 trillion isn't much yet. If you compare it to other asset classes, it's a very tiny asset class compared to stocks, compared to the housing market, and so on. But I think the fear, of course, and I forgive me for not quoting him correctly, but Saifedean Amos of the Bitcoin Standard, he wrote in his book something like, it's very difficult to isolate yourself from a stronger currency or a stronger type of money. Basically, if you have a strong type of money in the market, it automatically sucks up capital from weaker currencies. And I think that is the main risk with something like Bitcoin. It's seen as stronger and safer than a lot of the fiat currencies, especially with the federal bank and all the central banks being able to increase money supply. So I think that's one of the threats, and also it's the fact that they're losing control over society, indeed. And I think that is why the CBDCs will ultimately come. I don't think we can fight it. Of course, we can fight it by having an alternative. But I think it will be one of the things that is also used for the tax system. So I don't think we can avoid much of that.
Yeah, unfortunately, but it pisses me off a lot that we are talking about suing CZ and Binance and or Coinbase, but their reasons are just like these kind of reasons that you see that you are lying in my face and you are being like totally. If it would be other way, you would call it illegal. But because it's the SEC and it's the government of America, you are like, okay, this is what needs to be done. Fuck you. No, we don't trust that,
Yeah.
But yeah. So what else we have in the markets today? Have you seen any interesting change in oil? Any interesting change in I don't know, in any other asset class that we should mention? I think we should talk about a little bit of the SP 500, but what's your takeaway on there?
Yeah, so S&P 500 has been hovering around the 4,200, 4,300 level. I think 4,300 level is the real resistance level that I see. And if we there's a chance, there's a couple of scenarios here. Either we get rejected immediately from 4,300. That means that we could, of course, go head lower from there, and 4,200 will offer support. If we break out and then fail, then that would be a very bad sign. I don't like such failed breakouts. So if we break out and we continue, then I think it's something really positive, and we could actually see a nice bull market for the longer term, which in a way is very strange, because with the things that are going on with the Federal Reserve Bank at the moment, we should expect normally that there's at least one more interest rate rise coming, possibly more. So it would be strange to see a bull market at this time. Having said that, we've been correcting since early 2022. So maybe it's true that all the bad news is already included. Everyone is expecting a recession to happen, and maybe it will not happen. Who knows? Maybe we'll not see maybe it will be a soft landing, and we'll continue upward from here. It's very well possible.
There's a couple of things I've been reading actually. One guy was one guy who knows a lot was saying the other day in Twitter that the SP 500 is held by 7 companies. The rest of them, if these 7 companies wouldn't be there, everyone would be, the SP 500 would be wiped out basically. Yeah. So of course I'm talking about Tesla, I'm talking about like Apple, blah blah, big ones. But the point is that what is that new that level that you believe that if SP 500 reaches and stays, it doesn't hit and then needs to retest down? What's the level that you think we're going to be in a safe environment for a longer period of time?
No, I think you make a great point. I think there's not so much a level that I look at. I'm more or less look at the 4,300 level being broken and price staying above that. That would be positive, and then you could always have your stop loss below it if you're trading the index. Mm-hmm. But market breadth, I think, as we call it, is a very important factor. And normally, when you see price of the index going up and it's only carried by a small amount of stocks, mm-hmm. They're setting new highs. There are certain indicators that also take into account the amount of new highs and the amount of new lows. Mm-hmm. The market breadth at the moment is very, very weak, and that needs to improve. We need to see more stocks actually setting new highs and more stocks going into positive trends. And then it will become a credible scenario. At this moment, it's still a very, very thin little thread that we're hanging on. And I think I'm looking at stocks individually, of course, the stocks that I own. I think there are certain sectors that could do really well. I think biotech is one of them that could do really well, that they could catch up. I think semiconductors have been going strong already, in AI, of course. And if inflation comes back, then we could see a lot of the basic materials sectors going up again. But the expectation for now is that the inflation levels are going to go down, and that's going to hurt especially the resource stocks. Yeah,
that's absolutely. I from my portfolio, what is got more damage and still having this almost the same damage is the tech side. And I didn't jump in Meta because I didn't really see it coming. That it actually went double already, so it's not bad. But basically, the ones who had more damaged are techs, are our high tech in essence, and of course also Bitcoin mining companies, Marathon Digital Holdings, and Sailor, and all of those. Yeah. And but what I've seen, at least in Europe, is that the insurance sector is remaining strong. In Finland, here we have Sampo, which is one of big conglomerate of insurance, and they just paid a very good dividend last week, in 31st of May, and it was pretty unexpected that it would be that big. So things those who are the historical steady income and safe havens, they are actually performing really well, which in this moment, like with the level of inflation that we have, it's like something to think about. If you can transfer money from here to there, not in Finland, because here in here you move €1 and it's already taxable. So
Yeah.
we are pretty screwed. But I hope to see some next moves soon. And anyway, from my side, and of course, not financial advice, especially from me, which I'm not an expert. The expert is more Joey, but I wouldn't recommend anyone to start taking too big bets or making too crazy movements right now, because it's really uncertain right now. Especially, we've seen also yesterday the reaction of the crypto markets. Bitcoin price is a really big indicator also nowadays that you need to take into account for anything, and the money can change drastically from one day to another. So yeah, the takeaway from me is be careful with your investments right now. Don't get the FOMO of that you're gonna miss out everything, because I think there's gonna be still time. What do you agree with me in this, Joey?
Yeah, I think there's a saying that goes, the road to inflation is paved with periods of deflation, and every time we are now in a inflationary period, and in between those you get interrupted by central banks taking action, and then you see periods where everyone fears deflation. That could be in asset prices, could be in consumables. And I think that is what's happening at the moment. We are in that kind of period. And during that kind of period, you want to own cash, basically. That's generally the idea. And until inflation comes back, and that's also the US dollar is a good sign of that. Once the US dollar weakens, and I'm talking about going above 110 again, then you want to be owning resource stocks. At the moment, the dollar is strengthening. I think resource stocks is a little bit early. We see oil relatively strong because of generally some production cuts and all that, but demand has been weak, and that's something to keep in mind. So yeah, inflation needs to come back, and then hopefully we'll see share prices going up.
Okay, so well, this was a very great conversation. Thank you, Joey, again. Thank you for the listeners, and this was our second episode. We are the dust suckers, and we love to bite and suck the dust and learn from it. Thank you very much.
Ramon. Thank you, Ramon. Thank you very much, and we'll catch up next week again with a different topic, hopefully something even more interesting.
Yes, let's go for the next episode. Thank you. Ciao, ciao. Bye.
All right, see ya. Bye.